What's up everyone, my name's Robbie, this is Robbie and Manila, and today we're talking about the best communication sector ETF. Welcome to the fourth video in our series about the best sector ETFs. I've gone over 3 different sector ETFs. Today we're talking about communication services. In this video we'll go over 4 different communication sector ETFs. We're going to compare them to each other, see which one's the best. Then we're going to see how that did against the S&P 500. Then we're going to do a little bit of technical analysis on that ETF, and that's the video. Now you might be asking yourself, why would you want to own a communication sector ETF or just an ETF in any sector? Well, there's a lot of different reasons. Like, for example, maybe I can't find any good stocks that I like in the communication sector, but I still want exposure to the sector, so I'm just going to try to own the whole sector. Or maybe I think communication services is a great play right now and they have good fundamentals in the sector, so I want to go long on communication services. Those are just 2 examples. I'm not saying to do those things, I'm just saying those are examples. So how has communication services done recently? Year to date, the communication services has a 19.7% return, whereas the S&P 500 so far has a 15.3% return. So far, telecommunications has outperformed the S&P year to date. Looking back at 2020, it overperformed in 2020, it overperformed in 2019. So investing in communication services recently has likely paid off. That doesn't mean it's going to be a good thing to invest in going forward. It just means it's done well. And as you can see, some people invest tactically. And so if they had overweighted that sector, it would have ended up being a good idea. Anyway, I hope you're ready. I think it's time to go ahead and get started. Let's go ahead and get started, and please in the comments below let me know what you think of the sector. Are you bullish on it? Are you bearish on it? And do you agree with my picks? Like I said, we're going over 4 different ETFs in this video. The first ETF we're going over is Vanguard Communication Services Index Fund ETF. It is ticker symbol VOX. We're going over the Communication Services Select Sector SPDR XLC. We're going over the Fidelity MSCI Communication Services FCOM. And we're going over the Invesco S&P 500 Equal Weight Communication Services EWCO. Here we have our comparison, and to familiarize yourself, you can see that we have VOX here, and that is Vanguard Communication Services Index Fund. This is a column, so this is all VOX, this is all XLC, this is all FCOM, and so forth. So basically, let's go ahead and get this thing started with the fee. We'll take a look over here at the net expense ratio. For VOX, we have a 0.10% expense ratio, XLC a 0.12%, FCOM, I'll call it FCOM today, 0.084, and then EWCO is 0.40. Now, you're going to say to yourself, okay, well, these are all pretty cheap, but why is this one more expensive? And it's because of the weighting of the fund. So if we take a look here at the weighting scheme of these different ETFs, well, we have market cap weighted for the first 3, and then here, an equally weighted EWCO. Now, equally weighted means that it's going to try to keep the same weighting in the portfolio for all companies. So for example, if there's a Google, if there's a Netflix, let's say there's 10 stocks. Google, Netflix, Verizon, they're all going to try to have the same weighting. So if there's only 10 stocks, they'd all be 10% of the portfolio. That would be the goal of the fund, to keep it equally weighted. Now, if it's a market cap weighted, like all these other ones, the goal is not to keep them equally weighted, it's just to have them weighted based on the largest company has the highest weighting. So that's the difference between these. I always like to keep an equally weighted ETF in here just to take a look. So let's move on. Next important thing we have are the yields. So if you're into dividends, if you're into yield, the communication services doesn't pay very high yields in terms of the sector. So you're going to see here that VOX has a 0.72% distribution yield, while XLC has a 0.65 and FCOM has 0.66 and EWCO has 0.98. So EWCO has the highest yield, but still the yield's not very high. Moving on to the Morningstar rankings, let's take a look first at the 5-year. VOX is a 3-star. XLC doesn't have enough data to have a rating here. FCOM is a 4-star, and also EWCO doesn't have enough data. So the next thing we're going to look at are the returns. So the first thing you're going to see on this is that EWCO here on the right side actually is not a very old fund, so there's not a lot of data, which is a problem. I don't love investing in new ETFs. I'd like it to be maybe like 3 years old so I can see a little bit of historical data. Now that's just me, maybe you're different. So if you want to take a look here, EWCO does have a 47.46% return for 1 year, which is the highest return out of all of these. So the equally weighted ETF actually was outperforming, for the year at least. So off the bat, I'm just going to tell you I'm not going to pick EWCO because I don't think there's enough data. However, this may be a pretty good ETF going forward. It's had a good 1 year return. So if you're okay with that, maybe this would be one that you would like. But I'm going to kind of keep my eye on this over the next few years and see what happens with it. So that's going to leave me with these other 3 ETFs. Now let's go to the 3-year return and we can see which one has the highest return. They're all very close, so very hard to kind of distinguish which one's going to be better in this one. FCOM is a little bit higher here on the 3-year, and then if we take a look at the 1 year, it looks like VOX is a little bit higher. And if we look at the 5-year, FCOM really has done a lot better than VOX over the 5-year return. So 11.34 between these two, 16.06 for FCOM, way better return over the 5 years. And then XLC doesn't have data going back that far. So far, FCOM is the one I'm liking, but first, let's take a look at the portfolio to see what's in there. One of the things I like to look at kind of initially is how many holdings it is. Is it more concentrated? Is it more diversified? So VOX and FCOM are pretty diversified, over 100 stocks in each. XLC has about 28 stocks. So now let's look at the market cap weightings of these stocks. So you'll see here that VOX has 60% in giant cap companies, XLC 68%, and FCOM 64%. So these aren't very different, but you'll see, of course, the equally weighted portfolio has a much lower amount of giant companies because it's going to be more equally and spread out in the portfolio. What you're going to get with VOX and FCOM that you're not going to get with XLC is some exposure to small and micro companies. A little bit, not a lot, but there is a bit in there. XLC is the more concentrated, is going to have a much higher weighting towards the larger companies. And the last thing I want to look at are the top 10 holdings. So for VOX, we have Meta Platforms, which is Facebook. For XLC, we have Meta Platforms. And for FCOM, we have Meta Platforms. So they all have the number 1 top 10 holding. Alphabet, Class A and C, so they both have those two as the top 10 holdings as well. Disney, XLC is a bit different. It has Netflix instead of Disney in here. So as you can see, they're all pretty similar. They have similar companies in it, and the difference is kind of the weightings in a lot of these. Now it is time for me to pick a winner on this, so I'm going to be picking FCOM. Reason being, first off, it has the lowest expense ratio, not by a lot, but it is the lowest, so that's a positive. And it's also got the best 5-year return between VOX and FCOM with a 16.06% 5-year return versus 11.34%. All of these ETFs seem pretty good, but this is my choice, and now the next thing we're going to do is take a look at how this has performed versus the S&P 500. Taking a look at the chart, we have FCOM versus the S&P 500 as seen through VOO, which is Vanguard's S&P 500 ETF, VOO being blue and FCOM being orange. This is a 5-year return, and as you can see, the S&P 500 has outperformed FCOM over that time. So that might be an interesting fact for you. The next thing we're going to do is take a look at the technicals of FCOM. As you can see here, from around March of 2020 up until August of 2021, FCOM was in a uptrend channel. It recently broke down through that channel in early September of 2021, and now it is consolidating. Let's zoom in a bit to see this in more detail. So one thing I do like about this chart is RSI is really bottoming out here in the 35, which is a positive signal for the sector to potentially turn over and kind of go back up. What I would do in the very short term is watch the bottom of this Darvis box to see if it bounces off of this level. If it does, potentially it could go back up to the top of this box, in which case RSI may also increase and potentially MACD would turn over there. Now, if it does not bounce here and it does break down through this area, it could go down to around 50 to start, which would be a Fibonacci retracement level I have. It could also go to 49.6, or it could go further to 48.31, which are two different support levels that I have here. So what I would do is I would watch to see what happens in the very short term if I was going to try to time an entry into this sector ETF. So anyway, that's all I have for this video. Thanks so much for watching. Hit that like button if you liked it. Subscribe if you want to see future content like this. And by the way, interestingly, I have another video. It's coming up It's on the end screen, and you should probably click it right now.